Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video I'm going to be talking about a trade idea that I've got. But first, before we talk about the trade idea, I just want to give a quick market update because we have just had the release of US CPI data for October, and it was a pretty hefty downside surprise. For once, we've actually had a downside surprise in the inflation data. Let's just jump through the numbers here. Starting with the headline CPI, 7.7% year over year, below the expected 8%, and a pretty big drop from September's 8.2%. Month over month, 0.4, below the expected 0.6, in line with last month's. Core CPI, 6.3%, pretty big drop from last month's 6.6%, and below the expected 6.5% year over year. And the month over month core CPI price gain also smaller than expected at 0.3%, below the expected 0.5%, and down from last month's 0.6%. So that's a quick run through the numbers. In terms of how this is affecting markets, well, what does it mean? It means that markets are now assigning a lower probability that the Fed does another 75 basis point rate hike next month. In fact, let me show you the Fed CME tool. I always like to show you guys this just so you can see how markets are pricing for Fed meetings. See if we can get that to load. There we go. We're now talking about an 80% chance of a 50 basis point rate hike and just a 20% chance of a 75 basis point rate hike. Now, yesterday and in recent weeks, that's been closer to 50-50, as you can see here. Like a week ago on the 3rd of November, it was 50-50. Yesterday, we were slightly in favor of the 50 basis point rate hike, but now very much it's the base case, 50 basis point rate hike. Why? Because this softer than expected inflation data, which really shows that the peak of inflation is now, it looks to pretty much be in. If I just press on this, I can show you how the headline CPI has been coming down for quite some time now. That's 5 consecutive months now where headline CPI has been falling. And it means that the Fed doesn't have to be quite so aggressive, basically. They can slow their pace of interest rate hikes to 50 basis points for the next couple of meetings. It still remains to be seen how high that terminal interest rate goes next year. But yeah, bit of the pressure coming off the Fed. Now, in terms of how this is affecting markets, well, you're getting that classic sort of dovish reaction. You've got the dollar falling, you've got yields falling across the curve, and you've got risk assets or negatively correlated to the US dollar assets, all of them rallying. So that means stocks are moving higher, cryptocurrencies are moving higher, many commodities are moving higher. But my trade idea that I want to talk about today is to do with Bitcoin, because there's been some crypto specific things affecting Bitcoin in the last couple of days. Pretty much the collapse of one of the largest exchanges in the world, FTX, triggered a massive sell-off in Bitcoin in the last couple of days. I think I talked about this earlier in the week, but we fell to basically fresh annual lows under 16K at one point yesterday and this morning. We're now seeing a pretty ferocious recovery. Bitcoin up about 10% on the day, around 17,050. And I'm thinking, there could be an opportunity here if we can break above these next levels of resistance, which we're currently testing, which were the previous annual lows. There could be a bit of an opportunity to ride things back to the recent highs or the late summer highs that we saw just above 25K. Why am I saying that? Well, let's go with the technicals first. Bitcoin, if I really zoom out, was in a downtrend for pretty much the whole way since its all-time highs last November. You can see consistently moving lower, and then it kind of formed this trend line. But it was actually, the beginning of October, we broke above that downtrend. Now we were sort of consolidating, weren't able to see too many gains. Then we had this big dip to do with FTX collapsing basically this week to fresh annual lows. But it looks to me as though we're still above this downtrend, which means there is the potential for some near-term gains, technically speaking. And if the macro environment is also improving, then that could help Bitcoin. And one of the things you got to bear in mind with Bitcoin, guys, is regardless of what happens with these exchanges, Bitcoin is an entirely separate entity to these exchanges. If all of the exchanges, Binance, Coinbase, FTX, collapse, yes, that is a catastrophe in the short term for confidence in cryptocurrencies, but it doesn't actually affect Bitcoin because all of these exchanges are centralized and opaque, and no one apart from the people that runs these exchanges knows what's actually going on with these exchanges. Well, that's completely the opposite of the sort of spirit of Bitcoin, which is a decentralized cryptocurrency. It's completely transparent. Everybody can see what's happening on the Bitcoin blockchain. It's decentralized. Nobody can mess around with what's happening on the Bitcoin network like these guys at FTX were obviously doing with customer funds. They were obviously messing around in an irresponsible way, hence this 8 billion hole in their balance sheet that we're hearing about. Well, Bitcoin is the opposite of that. It's decentralized. So, you know, what happens with these centralized exchanges can shake confidence in crypto in the short term, but I think in the long term, it actually sort of underpins the importance of the idea of decentralization. Like what we've just seen happen with FTX isn't going to happen with a decentralized cryptocurrency exchange like Uniswap, which is run in a very very transparent way. It's run in a decentralized way as well. So yeah, I don't think besides putting off some retail investors and putting off some institutional investors that maybe don't really understand, and perhaps meaning that there's going to be a little bit more scrutiny from lawmakers. I don't think this whole thing with FTX really should damage Bitcoin's long-term prospects. But anyway, I'm sort of banging on too much. And the main point that I want to say is if we can break back above this 1750 to 18300 resistance area, approach 20k, and then maybe if we fall back to this support, I will be liking the idea of getting back in and riding a move higher to the 25k area if the macro environment, easing inflation, easing fears about Fed tightening, all this kind of stuff, a rally in stock markets, continued weakening of the US dollar, if that stuff continues, which I think it could in wake of this inflation data, I'm liking the idea of Bitcoin back to 25k. So yeah, guys, hope you enjoyed this video. Hope you all found it informative, and I'll see you all in the next one.